Hi there, you have tuned into Closing Trades on ET Now. I'm Srishti Sharma and along with me in the studio is Snehi Shah, and over the course of one next hour, we'll be trying to get you the strategies in the markets right now, because what we are seeing today is a good day coming in for the benchmark indices, because you call it a relief rally or the kind of rebound what we are seeing in the markets. The good part is that we are sustaining those high levels. Nifty has actually scaled past that 22,200 mark as well, what we are seeing right now, while Nifty Bank holding on to the gains of over 200 points right now. Well, for both the indices, yes, we are off the day's highest point, but the breadth of the market is looking quite cheerful right now, and just 5 stocks within the Nifty 50 basket that are having that red shade with them right now. One, of course, is Bajaj Finance. Other than that, IndusInd Bank and some of the heavyweights like HDFC Bank are seen to be drifting on the lower side. But apart from that, what we are seeing is that the metal pack, auto stocks, some of these beaten down names are definitely making it up the move. Other than that, some of these Adani group of counters are doing pretty well for themselves. Stocks like Adani Green Energy and Adani Energy Solutions are holding on to the gains of 7 to 8%, and definitely IT is also seeing a very good day for itself, with Coforge leading the pack. But Snehi, which are the newsmakers then?
Well, absolutely, and we have to talk about the biggest newsmaker today, that is Coforge, flying up and away in today's trade. It's seen a little bit of a cut from the day's highest point, but nonetheless, a 7.6% uptick is what the stock is seeing right now. Lots of news flow. First up, they've approved the stock split in the ratio 1:5. There's also been 2 acquisitions done by subsidiaries. Coforge Inc. has entered into a stock purchase agreement with Rhythmos Inco. Also, subsidiary Coforge Technologies Australia has entered into a share sale agreement with TM Labs Private Limited. So on the back of all of this, Coforge is in focus in today's trading session, and also it's pact with Sabre that they have signed today. That's also in focus today. It's a 13-year pact valued at $1.56 billion. So lots of reasons why Coforge is a stock that's in focus. Let's look on the flip side, talk about another stock that's in focus today on the back of some news flow coming in, and that's BSE. That's the stock that we are talking about in today's trading session, because NSE, remember, has announced yesterday post-market hours that they have shifted their expiry for all contracts, for all F&O contracts. The expiry has now been shifted to Mondays instead of Thursdays. So that is also very important to watch out for. On the back of that, BSE is under pressure, a 3.5% cut coming in, because remember, the Sensex expiry is on Tuesday, and now the NSE, the Nifty expiry, has been moved one day prior to that. And lastly, let's talk about Bajaj Finance. That stock is also in focus. The RBI has directed large NBFCs to stop new lines of credits and renewals. So that is something that is keeping the stock in focus today. It's a 3% cut coming in on Bajaj Finance as we speak.
All right, so those were the newsmakers then, but with this, let's also go along and connect with our experts on the show. Then we are being joined by Sibani Sarkar, who is the Senior Executive Vice President and Fund Manager, Head Equities at Kotak Mahindra Asset Management, as well as Kunal Botra is here on the show as well. A very good afternoon to both of you, and thank you so much for your time. Shibani, firstly, help us with your take on the markets, because some of them are really calling out a near-term bottom in place, and also trying to look out for some more opportunities. Give us your understanding on the markets, the bit of a rebound that we are seeing today. What's been your reading?
Hi, good afternoon. So when you look at our markets and the way the market volatility has been since the month of December of last year, the volatility has been on the back of global as well as domestic factors, and some of these uncertainties still remain. However, what we must also understand is that when we look at markets, the Nifty itself has corrected almost 13-14% from its highs. Similarly, the mid-cap and small-cap indices have seen a greater correction. More importantly, at a stock level, the correction has been even steeper than what the headline indices seem to suggest. So in this context, when we look at valuations today, what we believe is that Nifty, especially in terms of the large cap composition, is trading at multiples which are today lower than its long-term averages. Also, remember, when the Nifty is concerned, we've seen significant changes in the constitution of the index, with a number of private sector companies replacing public sector ones, as well as B2C companies replacing some of the B2B ones, where typically valuations are higher. And therefore, in that context, when we look at the large cap Nifty, the Nifty valuations are reasonable and trading below long-term average multiples. Mid and small caps have seen correction. However, there the multiples are still at a premium to their long-term averages. And therefore, in terms of risk reward, what we believe is that large caps are clearly better placed even after this fall of mid and small caps. and the preference would remain for large caps. Now, in terms of mid and small caps, as I was mentioning, if you look at it on a stock specific basis, some of the stocks have clearly corrected far more than what the headline number in terms of the index valuations show today. And therefore, one has to be more bottom up. Here, there are key factors that we are keeping in mind. One, of course, the business model and earnings trajectory and visibility of earnings. Second is valuations and reasonable valuations, and therefore not chasing momentum, but clearly looking at reasonable valuations. And thirdly, looking at stocks where there is free float and liquidity as compared to stocks where free float is limited. So therefore, from a market construct perspective, some of the uncertainties clearly remain. But where large caps are concerned, valuations seem to be far more reasonable, especially in line with their long-term average multiples.
Thanks for the view coming in. This is Snehi also joining in the conversation. Shabani, until yesterday, we had registered the 10th consecutive day of loss coming in for the Nifty, the largest ever streak or the longest ever streak since its inception years ago. So that seems to have reversed only today in today's trading session. Do you believe that after these 10 consecutive sessions of cuts, we have bottomed out and now the road ahead is optimistic? Or do you believe that today is a one-off that we're seeing in the market after so much back-to-back pessimism and the market correction can still continue going ahead?
So it's very difficult to always call the bottom in the market. So that's something that I would not attempt to do. So what I was mentioning is that when you look at the market correction and look at the reasons behind the market correction, some of the factors have been global, including what's happening in terms of global tariff-related policy measures, monetary policy growth, etc. And there have been a slew of domestic factors as well, including slowdown in terms of our corporate earnings that we saw in the last few quarters, as well as government spending. Now, if you look at these factors, on the corporate earnings perspective, we do believe that corporate earnings should start to gradually improve, especially as we go into FY26. And therefore, that is one factor that we will keep a watch out for. In terms of global factors, including geopolitical tension, tariff-related policy measures, these uncertainties remain. And therefore, one could possibly still expect some degree of volatility in the market. Having said that, as I was mentioning earlier, when you look at markets and you look at valuations, especially where large caps are concerned, today the Nifty is trading at multiples which are lower than their long-term averages. If you look at even terms of the ratio of MSCI EM to S&P 500, given the fact that we've seen a lot of FII outflows out of EM, including India, the ratio is possibly at its lowest that we've seen since March of 99. So it's a fairly long-term data point that we are looking at. And also in terms of stocks, there are considerable number of stocks that are trading almost 50% lower than the 52-week high. So therefore, there is some degree of valuation comfort that is coming in. Now, in this sort of a market, the way we are approaching it is look at stocks where you are seeing earnings visibility. As I mentioned, large caps still continue to offer better risk reward as compared to mid and small caps as a pack. However, within mid and small caps, there are definite points of opportunity. And we would use these sort of corrections to look at these particular segments and stocks in terms of allocation.
That's the take on the markets. Kunal, help us with your take as well. The bit of a rebound that we are seeing today. Do you believe that this is sustainable, or traders might actually look at some opportunity to exit some of those trades where they feel they are stuck and there could be some profit booking from these levels? What is your thinking?
No, I think my sense is, or my two bits is that I would probably believe that this leg of the market recovery which is showing is not a rally which is out of exception. It is a rally which was bound to happen because of the steep oversold nature of indicators. We were discussing this a couple of days back also that how 22,000 mark should act as a major pivot point for the indices, and the index should just about fluctuate into a trading band with pivot at 22,000 mark. And I think it's good that we're seeing a bounce back over the last 2 days specifically. What we're seeing also is mid caps, large caps, small caps making a very strong comeback. Now, I strongly believe that from here on, we should be looking at two very important level of resistances, because both these resistances are actually the gaps which were created for the index. The first one is at 22,500 mark, which was I think a gap created just about 3 or 4 trading sessions back. And then the second one is around 22,800 mark. So these are the two resistances which I would probably keep an eye on. But the very interesting part when I'm looking at the charts of individual stocks, many of the stocks have come back to their February first week levels for themselves. Whether it's like, for example, SBI, whether it's the mid cap names which are beaten down 20-30% in the month of February, many of the stocks are coming back to their February first week levels. So even if you try and put this as a context that how much the markets can bounce back, then we could be looking at the Nifty coming back towards the February first week lows. That itself should be almost 23,800 plus, 22,800 plus mark for the index. So net expecting the markets to continue to move up higher, 22,800 could be the first formidable resistance which we can keep an eye on.
800, the first level to watch out for on the upside on the Nifty. Could not hold that thought. And Shibani, you to stay on with us. We'll slip into a very short break and keep it going about the market discussion just on the other side when we return. Hi there, welcome back to Closing Trades. We are currently holding on to the gains that we've seen over the course of the day, around the 22,300 mark, comfortably above that for the time being. And it's looking good for the broader end of markets today as well. But there is one stock, in fact, a couple of stocks that are beaten down in today's trade belonging to the NBFC side, and Bajaj Finance is one of those, a 3% cut on the stock as we speak. But let's understand why this is happening. And from media reports, we understand that the RBI has directed large NBFCs to stop new lines of credits and renewals. Let's understand what this means first of all and what the impact could be on these NBFC companies. Shweta Daptardar, the Vice President Lead Analyst of Diversified Financials at Elara Capital, is joining us on the phone line for the same. Shweta, first of all, good afternoon and thanks so much for joining us. Give us your first take on how do you see these restrictions from the RBI directing NBFCs to stop new lines of credit and renewals. What impact do you think this could have on the NBFC players right now?
Yes, good afternoon. So you have absolutely pointed out correctly that the renewals of these flexible lines of credit, which are generally provided to small business owners, have been directed by RBI to curb as far as large NBFCs are concerned. So we incidentally have to understand the fact that the RBI's concerns stems from the fact that these are not fixed repayment structured loans. So the borrower might take the part of the loans or use these cash flows from the loans to siphon off the funds and use for multiple other purposes rather than paying off the existing loans. So this concern is largely coming from there, wherein these loans have also lagged impact because of the flexible nature and structure of the loan. So largely, this is slightly detrimental for NBFCs who have been engaging in giving SME loans, small business loans. So while we at Elara Capital have not interacted directly with the NBFC management, but prima facie we understand players like Poonawalla FinCorp, Bajaj Finance, AB Capital, L&T Finance, IFL Finance have been giving small business loans or SME loans. So yes, we definitely wait and figure out as to how this will pan out for each of the players. But as of now, this definitely would mean slightly detrimental to the incremental disbursals.
Hi Shweta, good afternoon. This is Shrishti also joining in. So we do understand that you have highlighted some of the stocks there and some of the names which can get impacted if this goes through. But give us a sense that what is your estimate of the total credit disbursed under this particular facility in the overall pie? How much share this particular facility might have and what could be the likely impact on the sector as a whole?
Yeah, true. So like said, one such data point is not present or available, but media reports have been highlighting that such a line of credit could be in the quantum of as high as 50,000 to 60,000 odd crores as far as NBFC lending to such small business owners is concerned. See, we have to understand the fact that RBI has been constantly highlighting on the indebtedness or the over-leveraged scenario that has unfolded at the borrower or the customer level. So while this particular payment structure or these particular flexible credit lines allow the flexibility to the borrowers for making the principal payments at the end of the tenure of the loans, and make only interest payments in the initial phase of the loan period. So this would definitely mask the actual credit worthiness of the borrower. So that is something RBI is primarily concerned about.
Lastly, before we let you go, help us understand if this could lead to some liquidity issues in the system, and if it's not going to be the NBFCs who are going to be looking behind this renewal and the extension of this credit line. Do you think banks could be emerging winners now? Because this restriction we've not heard on banks so far, it's only been on NBFCs, right?
A better position to extend such flexible credit lines because they have strong hold on the cash flow assessment of the borrowers. NBFCs, on the other hand, do not have direct access to the overall situation or scenario on the cash flows of the borrowers. So I think banks definitely are your slighter beneficiaries. Coming back to NBFCs, as I mentioned, we do not know the exact quantum of this particular credit line. So we really do not know whether this will have a contagion effect in terms of liquidity stress. But yeah, nonetheless, both the individual borrowers as well as the business owners will definitely find difficult to raise incremental funds in the interim periods.
Shweta, with this, we'll let you go, and that really appreciate you taking the time out and giving some more sense on this particular news flow. But definitely on the back of this, the media reports highlighting some restrictions there. Bajaj Finance is one of the top losers. But with this, let's get back to our techies then, and Kunal as well as Naresh are both on the show right now with us. And Naresh, I want to come to you for have some of the stocks that you are eyeing at this point in time. Give us your closing trade picks right now.
So we are seeing a good bounce in the small cap index. So looking at a stock which has done well in terms of not correcting, that is a brand Industars. The stock has not broken below that 315, 320 mark for the last 3 months, wherein majority of the market stocks have. So looks like a eventual move towards 360, 370 again also going forward. So for now, a good risk reward buy in the stock.
Okay, and Kunal, what about you? What's looking good right now? What would be your closing trade recommendation?
Yeah, I'll go with a differentiated contra buying call. It's a buy on IRCTC. The stock, over the very short term, looks to be have hit the major oversold territory in terms of indicators. So I think at current levels, would look out for a swing upside of at least 5% over the very short to medium term.
All right, with this, we'll slip into a very short break. Viewers, don't go anywhere. We'll be right back with more, but just on the other side of the break. Welcome back to Closing Trades right here on ET Now. The market's looking really good right now, but the case in point being some of these banking majors, IndusInd Bank as well as HDFC Bank, they are actually not a part of the party yet. But Kunal, help us with your take on these banking majors, because what we are seeing is that just yesterday it was Nifty Bank that was holding strong, even today holding on to some bit of a gains right now. But when do you feel that stocks like HDFC Bank will also participate in this bit of an up move?
Best part, Srishti, because had it been that all the performing sectors of the previous market leg, if these stocks would have probably performed, then we could have doubted that maybe the market rally could have been more of a short term, and we could have hit some sort of a fatigue point in terms of the short term rally. But the fact that many of the stocks which were the performers of the previous rallies, these stocks are still trading below their previous swing highs. Case in point, for example, HDFC Bank, then you have Kotak Bank, even Axis Bank to a larger extent. I think the stock has been more sideways. So when you have such kind of private sector banking names, which are the better performers, when they're going more sideways or showing signs of slight underperformance, it means that the markets are waiting for maybe one more leg on the upside. I strongly believe that many of these stocks on the private banking side, I think they should start to pick up pace from here on. But the only question is that maybe we may not see an immediate recovery into these stocks, because the market tends to first move into a short covering mode, and once the short covering is out, then I think there is more confidence which gets built up, because you need to see external data points like the dollar index, then the crude oil prices, etc. Once these different asset classes, once they come back into a more of a comfortable position, that's where long built-up formation and the previous sectors, they start to pick up pace. So I strongly believe that over the next few days, you might actually expect that many of these private sector banking names, they could come out from their sideways consolidation, and they would probably give a second level of a breakout on the upside.
Okay, so that's Kunal's view on the entire banking and financial pack. We also have Rajat Sharma, founder and CEO at Sana Securities, who's joining us on the show. Rajat, hi, good afternoon. Thanks so much for taking the time out and speaking to us at ET Now. Quickly, want your view on the entire metal space that's up and away, shining very brightly in today's trading session. Of course, week to date, also the metal pack has done very well, and month to date as well, the metal packs have clocked a gain of 5.5%. Vedanta, Hindustan Copper, SAIL, Tata Steel, all of these stocks have done pretty well over the course of last couple of trading sessions. What's the outlook going ahead on the entire metal pack of stocks?
Well, the short answer to that is I don't know, because I'm not invested in metal stocks, and given the slowdown in the metal demand, I'm not looking at this sector, and anyways I've not liked this sector because of the debt issue. So I'll cut that short, and I'm not invested in looking at metal stocks right now.
Rajat, also tell us that what are you looking at this point in time, given that everybody has been calling out for a near-term bottom at least in place and advising to start looking out for opportunities. Are you also having that same thought?
Yeah, no, I've had that same thought for a while now. I've had that thought, if I'm being very honest, I've had that thought around, since the time when markets were 4-5% higher than where they are right now. However, today's bounce back, I think is more of a short covering, and don't be taken away by this. Keep investing systematically is my sense. And where I'm looking to buy, you were talking about banks. That's one of my favorite sectors right now, because one after the other, you see news. Everything seems to be, pointing towards a major recovery in financials, and particularly large private banks. First, it was, taking away of tax advantage which debt funds had, where, they were no longer tax advantage. So a lot of money started coming back to traditional banking system. Now, NBFC is not allowed to extend line of credit, to their customers, while large private banks can do that overdraft facility. So, and also keep in mind that large private banks like HDFC, Kotak, IndusInd, barring ICICI, which because of its merger with ICICI Securities has performed really well. Most of the other large private banks are available at, their historic low valuations. So I'm really, really positive on that one sector, and the other being consumption, particularly FMCG, where nothing seems to have happened. And I've spoken about stocks like HUL, Asian Paints, largely sticking to, in both cases, private banking and consumption, largely sticking to India-centric stocks, which would not really be impacted by what happens to. So far, that's been our approach. What happens with the tariffs and everything, because they make in India, they sell in India. That's where we've been increasing our allocation. And it may take a while, but I'm pretty sure that these two sectors will bounce back. I actually have one view which may just be a little contra to what I keep hearing, that everyone keeps talking about the fact that this correction that's happened, it's not going to be a V-shaped recovery. It would take a while for markets to rebound. Given purely when I look at my clients' portfolios and the high net worth individuals that I'm dealing with, a lot of them are still sitting on a lot of cash. So despite this correction, I have not personally, I don't know why this correction is happening. I think it's purely largely still FII oriented selling who are happy to sell at lower and lower levels, because that's what you're seeing. In terms of my client book, I've not seen any redemptions. I've not seen any slowdown in investment. In fact, on the contrary, they're investing and they're still holding a lot of cash. So then there's so much money lying on the sidelines. Whenever this tide turns, my sense is money will come back quite aggressively, both from domestic. And look, FIs are not going to stay out for a very long time. So, and when that money comes in, it would be in frontline indices, because FI money is usually not invested in small and mid caps. It would come back in frontline indices, Nifty, Bank Nifty, those top 10, top 20 names. And those are the ones where you should be looking to buy, this ones which are battered mainly.
Interesting view coming over there. Hold that thought, because you mentioned a name. Asian Paints is something that you're liking from the consumption space. Naresh, I want to come to you on that. Give us a technical outlook on Asian Paints, because as I can see, that stock is at a 52-week low. It's been beaten down in trade on the back of a couple of fundamental factors as well, on the back of Birla's entry into the paints segment. Ever since then, Asian Paints has not done well. Q3 has also been rather sluggish. But on the charts, now that the stock has been beaten down so much, are you spotting any sort of recovery for Asian Paints?
So in the short term, tough to find a reversal here. But if you look at the price point today, we are at 2100 odd levels. Pre-COVID, the price used to trade at 1850 to 1900 in 2019. So very few stocks have actually gone back to pre-COVID levels. Also, the stock used to be this prices back in September 2020. So in that sense, at current levels, you don't have a lot of downside. Whether it will be a recovery very quickly is tough to call. But looks like at this point, going forward, there could be a bounce back and then a base formation rather than a further downside from here on. So, and the stock has already corrected from 3400, 3600 all the way down to 2100. So that's a large correction which Asian Paints has seen for the first time in many, many years.
That's the take coming in on the paint major, but I would just like to take that point forward what Snehi was making with respect to metals, because that pack is definitely shining bright. There are a lot of news flow on this one. On one hand, we have that macro data coming in from China, which seems to be supportive, but on the other side, it's S&P rating, which has come out with a note where they are highlighting that given the fresh tariff, especially on the steel and aluminium from Donald Trump, there is a possibility that these cheaper imports could find their way into the Indian markets, and that's one of the factors that has already been impacting the Indian players largely, and the industry has been calling out for some restrictions on that front so that at least domestic prices can be held up well. But given all these news flows, we are seeing that this pack is definitely seeing a good rebound. That's metal index for you, a 4% jump on that particular index. But Kunal, if there's any stock that you wish to flag off within the metal pack and especially within the steel pack, because these stocks are having a good day indeed, 4 to 5% jump coming across the board.
Yeah, I think it's been a good day for many of the metal stocks. Something which I've been bullish on from the metal pack over the last 1 week and almost consistently has been Tata Steel. I've been riding this uptrend from 120, 125 for Tata Steel to current levels of 145 plus mark. I would still believe that the stock looks fairly attractive, but what happens is after such kind of a 4-5% up move, it's bound to be that the stock takes a pause for a couple of days and then moves up higher. But I also believe that Hindalco is the other stock which has started to look extremely attractive. So what's happening is that many of these metal stocks, they're providing two-pronged breakouts. One on price front, where these stocks have come back into a major trend line breakout of the last 6 months, 9 months, 12 months kind of a price correction mode. That's the first indication that the trends for these metal stocks is reversing. The second and the more intriguing one is that many of these metal stocks are now coming back about their longer term moving averages. For example, Tata Steel, just about I think a week or back at 135 levels, the stock was on the verge of a breakout of its 50-day moving average. Now at 145 plus mark, the stock is on the verge of a breakout of its 200-day moving average. JSW Steel has already done that in terms of a breakout above both these two key average levels. Hindalco is also on the verge of a similar kind of a breakout. So when you put this into context, that 3 out of the 6-7 prominent names from the metal pack, they are showing signs of a formidable up move, as well as a strong price as well as indicator breakout. That itself indicates that this could be a sustainable move. The two stocks which I would want to highlight from current levels, of course, could be more of a buy on dips, could be Hindalco as well as Tata Steel.
Hindalco and Tata Steel looking good to Kunal from the metal pack. Rajat, coming back to you once again, on one hand, while you like financials and consumption, talk to us about sectors that you are still a little wary upon, where you are treading carefully, and also give us your view on something like an IT, pharma or auto. What are you making of these sectors?
Sure. So, auto is a sector which I like, given, the stocks that I have in my portfolio. And let me make a disclosure. I've had Tata Motors. I've recommended it on your show. I have it in my portfolio. It's available at very, very attractive levels. The problem is this was one stock which was supposed to be the, front runner in terms of making that EV switch in India in the passenger vehicle category. But then there's so much going on in auto space right now with Tesla coming to India, the whole shift and the whole regulatory landscape shifting towards EVs. Broadly, we are avoiding this right now. So the fresh buying that I am doing for most of my clients is right now in consumption and within banking. There's one odd stock that we've added, Sanofi India, which posted very, very good numbers. This is after the company has split into two, because Sanofi India, the numbers that they posted, they're expanding their cardiovascular practice through mergers and expansion, and available again at very cheap valuations after the merger. They started improving their earnings, and available at multiples of 29, very good dividend yield of about 2.5 to 2.5%. So that's one stock we've added. So pharma is one exception where I'm adding stocks where the sales are happening outside of India. But other than that, until this whole tariff war settles down, it it sort of confuses me why people would not buy stocks within large private banking and within consumption space, because it's not like the slowdown, particularly in consumption and FMCG, is going to stay around forever. I know that there is a genuine slowdown, but if earnings start improving from here, the stock prices could perform far ahead of the earnings. That's how cheap they're available right now. So the two sectors where we're doing buying is private banking and consumption. Auto, broadly, we are avoiding. I've already spoken of steel and metal, which is a space we are avoiding. Pharma, I've made some buying. The other sector I'm still staying away from is PSU. A lot of investors are actually jumping in into buying PSU stocks because they seem to have corrected, particularly power generation stocks. But keep in mind from where they started running, and for no reason. A lot of these stocks for 10, 20 years have traded at 50 to 60% cheaper valuations where they're trading now. So I don't see any reason why this change has happened. So not looking at buying anything there. So that's where we are sticking to private banking and consumption space.
So private banking and consumption is the place to be, as well as Rajat also shared select pharma names that he is bullish on right now, one being Sanofi India, of course. But other than that, what's holding up well is Indigo. Let's pull up the chart, because that stock is definitely flying high, didn't participate much in the recent market fall. And what we are seeing is that the stock is now approaching its earlier highs that we have seen back in the month of December, close to 4750 odd levels. But Naresh, I remember that you have been tracking this stock, you have been recommending this stock as well, and now that yet again it's a 2% jump coming in on this particular counter, do you believe for those who have taken your advice, it's good time to maybe look to book out some profits here?
So it would be a bet wherein you continue to tail the position. The stock has shown strength. And first, it did not break below 3,800, 4,000. Now it's given a short-term breakout, very close to taking out the recent swing highs and getting into new all-time highs. And also the fact Brent crude now at closer to 70 odd levels becomes a positive for the stock. So structurally looks like the stock which could be a leader going forward. So for now, partial profit booking is fine, but one could keep a trailing stop loss now at 4,500 and write it off.
Outlook on Interglobe Aviation. Kunal, have to get your view in on Coforge. It's a stock that's been in focus, 8.5% gain. Do you believe that this, after this gain, the stock still has some more legs to the rally going ahead, or this is a one-off on the back of the multiple news flows that we've seen, and now a slowdown could be expected? What's the outlook?
Yeah, I would probably believe that could be the latter, where I would believe that the stock could have seen a one-off up move, because there was a similar kind of a price volume uptick for Coforge. I think just about almost like exactly 1.5 odd months back, when the stock moved in a single day from 8,100 levels to almost I think 9,200 or 300 mark. That was the high the stock had made on a single day. Post that, in the next subsequent 2 to 3 trading sessions, the stock actually caved back into the selling pressure and managed to come back towards retest of the previous support. The concern with the stocks or charts like Coforge is that the structure for the overall IT space, large cap and mid cap, I think it's still on the negative side. So that's where I would believe that maybe I think we should take it with a pinch of salt. My expectation is that the stock over the next couple of days, maybe not immediately tomorrow, but I think over the next couple of days should probably try and get back into a corrective mode. I think maybe closer to 7,500, 7,400 would actually be a much more better range in case if the stock cools off and comes back to that level for a good contra buy.
All right, that's the take coming in on the IT space and specifically Coforge. But Rajat, I wanted to have your take on some of these beneficiaries with respect to the crude oil price, because Naresh was just flagging off that now that the crude has slipped off and now the Brent oil is actually below that $70 per barrel mark. Indico is the key beneficiary. You're just highlighting Asian Paints for us. But within the auto ancillary tire stocks, what we have seen is that they have also had their share bit of correction. Do you believe that it's time to look out for some of these tire companies rather, or any other particular theme with respect to the crude oil falling off?
Yeah, definitely tire stocks, auto ancillaries is something you can add because right now they're available at decent valuations. I think if you see a CAT, it's available at 21, 22. I looked at this, but I think the biggest beneficiary of this would be the oil marketing companies because those are available fairly cheap, BPCL and HPCL. Whenever you see crude prices stabilizing, that sort of helps oil marketing companies because they're inversely related to crude oil prices. And at the same time, the likes of ONGC and Chennai Petrochemical, these companies will struggle. All of them pay higher dividends. So if you had to buy something, BPCL, HPCL would be a good thing to buy. I'll actually come back once to the IT pack. And, since you asked me that question last night, completely missed out on answering that. I was just hearing Nuresh. I have this view that there's a lot of talk which is taken out of proportion in terms of artificial intelligence and, Indian IT struggling because of that. Artificial intelligence may be true, but I don't see Indian IT struggling. I have Infosys in my portfolio and I keep adding it the moment it comes to around 1700 or, goes slightly below. And I keep recommending it as well. It comes at a very attractive dividend yield right now. And why I say this is because, their earnings are not impacted. So, Infosys earnings, so long as it's growing at 15, 16% annualized, some years it grows 20%. There have been years where it's grown as little as 2, 3%. But the AI has been around for a while now. And even if you see their quarterly earnings, they've not made any dent. So, these large IT companies in India, either they evolve and, benefit from the AI transformation, or it'll take them some time. But so long as their earnings are intact and the stock keeps getting cheaper, it's a great opportunity for anyone to buy that. So I think right now, if it's looking weak structurally, the whole IT pack, it would actually fundamentally be a very good idea to buy these stocks and hold on to these stocks in their portfolio because I have many times in past said if one global multinational company that will come out of India in the next 10 years, it will be from IT because we do IT probably the best. And this may be my personal view. Whatever is happening in the US will ultimately help the Indian IT sector. So if things move around in the world, it would actually be beneficial for Indian IT. So that's my view on IT. That's one more sector where I'm really positive right now the way it fell the last 3-4 trading sessions. And look, Infosys and TCS, these are stocks. Infosys, anytime it's below 1700, I like to buy it. But yes, tire stocks, they do look attractive at these prices. And I also feel that they will continue to be attractive, both tire stocks and for that matter, oil marketing companies, because low crude oil prices are here to stay given everything that's happening in the United States. And they're going to start fracking and they're going to produce a lot of oil. I'm in no doubt of that.
Is very bullish on the IT pack and especially Infosys from there. And also tire stocks are looking good right now on the back of falling crude prices. But time now to get in some BTST trades. And Kunal, what is your BTST call for the day? What's looking good?
So Sneha, I'll go with two buy calls, and both of them are completely different in terms of the chart patterns. First one is about JSW Energy, a stock which is completing an inverted head and shoulder pattern at current levels of 500 plus. So would look out for targets in the range of 535, stop loss at 490 for JSW Energy. And the second is about Bajaj Finserv. I understand that there's been some negative news flow for the stock, but then today's candlestick pattern is a classic hammer pattern for Bajaj Finserv. And there is a very strong probability that after such kind of a hammer formation, the stock generally moves up higher. So my expectation is the same for Bajaj Finserv. Buy with a target of 1880, stop loss at 1755.
All right, so 2 buy calls coming in from Kunal at this point in time, but definitely a good day for the Indian markets. But is it India's moment on the global stage? Chris Wood remains bullish despite a near-term cut in their ratings across portfolios, while Jim Walker says that India stands out for the policy stability. Both agree that India and China could be 2025's biggest winners. Let's go across and listen into them.
Given India's already corrected a lot, it will fall less. But the key market that will outperform if the US market's going down, well, there'll be the two markets which have got a chance of outperforming in the near. Well, they have been outperforming year to date, and they can do so more. I would say are China and India. So China, I've increased my position in China in the last few months. China bottomed last September at about 8 times earnings, and although China is not booming, the Chinese market can double just on Chinese consumers going from pathologically cautious, which is what they were last year, to moderately cautious.
The state of policy generally, so monetary policy, fiscal policy, and exchange rate policy. India looks to, I said this in a report that went out yesterday to our clients, that India looks better to me now than at any time in the last 30 years in terms of policy stability. You know, I've said to clients this week, that this is the time to absolutely double down on the long on India, go much, much longer. And although worry about the valuations in the Indian stock market, my view is that economic growth is going to take off from here. And those valuations will be very quickly supported by corporate earnings and by economic growth.
Base case for now is that the same thing will happen as happened in 2016. That is that the dollar peaked when Donald Trump entered the White House. That's what happened in the first Trump administration. That's my base case today. It's also a reality that Donald Trump doesn't want a strong dollar. So that's my base case. So I'm hoping that the tariffs do not prove to be as big a deal as currently threatened. But if I'm wrong on that, the tariffs in the short term will be inflationary. In the longer term, they'll be negative for growth.
I mean, that's exactly the kind of range that I would be looking at when we look at past recessions in the US and slowdowns in the US. 10 to 15% on the dollar as a correction is not at all unusual. And that's really been our forecast, unfortunately, too long, that there was going to be a slowdown in the US and there would be a significant dollar correction before that slowdown really materializes. But I think, we could easily see a 10% correction and then a bit more in the US dollar over the course of the next 9 months or so.
Okay, that's the word coming in from two of the biggest global voices, Jim Walker as well as Chris Wood. As we're close to wrapping up on the market today, Adani Ports, Tata Steel, Adani Enterprises, M&M Power Grid holding smartly with gains of 4 to 5% each. On the flip side, it's Bajaj Finance, IndusInd Bank, HDFC Bank that continue to add some pressure to the market. But Rajat, coming back to you, I couldn't help but notice today Bajaj Auto is at its 52-week low, and since you are bullish on the entire auto pack, help us understand what's happening with this stock and what's the outlook going ahead. If you could quickly just sum up everything that's been happening with this stock and what's your outlook here?
No. I didn't say that I'm bullish on auto pack. I said I'm actually avoiding this right now purely because happening because of EVs coming in. Now, Bajaj Auto, of course, in two-wheeler space, whatever had to happen regulatorily has already happened. But you see, even Hero Moto, TVS, but all of these stocks in the last 2-3 years have corrected a lot after moving up fairly. And I think the only thing I could point this to is general change of sentiment after a massive rally and then, everything happening in the auto space. It's a general avoid, nothing wrong with these stocks.
The take on the auto pack, but yes, of course, it's been a good day for the markets indeed, though we are off the day's highest point when it comes to Nifty Bank, but we can't complain much given the fact that the US handover was quite very weak, though there was some bit of an excitement in the Asian markets, and what Nifty 50 has done today is a great recovery from the lowest points, and on an intraday basis, a commendable one indeed, 22,300 and above. is what we have seen on this particular index, while India VIX was actually holding in that red zone, and Nifty Bank also holding strong with almost 220 points of gain, while for the Nifty Bank index, where we were used to seeing those 600, 800 points of gain on an intraday basis, I believe that we have to be happy with these 200 points of gain at least. Some of these majors within the banking pack like HDFC and IndusInd, they didn't participate in the rally. Let's watch out for those in the upcoming sessions. But yes, of course, some of these beaten down names from the auto pack, they did very well for themselves. Some of these defense related plays were once again up, and stocks like BEL still holding on to the gains of 3.5% right now. But with this, Rajat as well as Kunal and also Naresh would like to thank you guys for taking the time out and speaking with us this afternoon. But Snehi, seems like a good ending for the Indian markets.
Absolutely, and all's well that ends well. That's the kind of trading day that we've seen today. It's looking good today for us. For the Nifty, we're ending with gains of 1.1%. A 250-point uptick coming in comfortably above the 22,300 mark is where we are shutting shop for the day. Sensex also can say the same, a 1% gain coming in, looking good around the 73,700 mark. Let's see how quickly we can scale back to those 75,000 marks from the Sensex. It's a 750-point recovery coming in on an intraday basis. Nifty Bank has also done pretty well in today's trading session, although it has pared some gains from the day's highest point. Nifty Bank is trading with gains of 0.5%, looking good over there as well. A 230-point uptick coming on that front. The advance decline ratio is favorable, very steeply favorable rather, in the favor of the advances today, with 2,300 stocks gaining today compared to 385 on the losing side. On the back of that, India VIX is lower by 0.8%, looking good over there as well. We're comfortable below the 14 mark on that front. Let's highlight some stocks that were in focus in today's trading session, and talking about some of the gainers today that have held the Nifty comfortably above the 22,300 mark. It's Adani Ports, Tata Steel, Adani Enterprises, Power Grid, M&M, NTPC, Aisha, ITC, BEL. All of these stocks have done pretty well in today's trading session. Of course, you have a dividend announcement coming in from BEL. You have Power Grid that's surging on the back of 3 interstate orders that it has won. M&M on the back of UBS upgrade coming in. So all of these notes have all brokerage action as well as individual news flows have helped all of these stocks give some support to the Nifty today. On the flip side, likes of Bajaj Finance, IndusInd Bank and HDFC Bank continue to trade in the red. So it's financials largely that were under a slight bit of a pressure. If you take a look at the sectoral moves today, all sectors have ended in the green for today's trading session. Nifty Metals continue to be the big winner. Vedanta, Hindustan Copper, SAIL, all of these stocks looking good, followed by media, PSU banks, energy, IT, FMCG, auto, pharma, as well as Nifty Bank. That's the pecking order of gainers and losers in today's trade. Let's talk about some brokerage action coming in today. A lot of stocks were in focus on the back of that as well. Goldman Sachs has maintained a buy on SBI Cards. That stock was in focus. Morgan Stanley has maintained an overweight on Polycab with a target of 73.95. That stock also looking very good. JP Morgan on M&M Financial Services. They've assumed coverage with an overweight rating, so very bullish call coming over there, and that stock has also done pretty well. Jefferies continues to be a buyer for Varun Beverages, looking good on that stock as well. And a couple of names on JP Morgan's high conviction list: Bharti Airtel, Persistent, Infosys. All of these stocks are looking very good in today's trading session. So basically, that's what the market construct has been like in today's trading session. Lots of stocks that were in focus, but all in all, we have ended in the green, looking good above 22,300. And let's hope this rally that we've seen is not just a dead cat bounce, and we continue tomorrow as well. From that note, it's a goodbye from Shrishti, me and the team that put this show together. Thanks so much for watching.